Good morning, everyone. It is 6 a.m., half an hour before we're going to open on Wednesday, August 7th. Yesterday, we were talking about how we're in this very delicate situation in the markets, and we are going to see how well we could thread that needle. The needle being the markets where we have the QQQ looking like it's going to hit a lot of resistance to upside and then potentially move downwards. It could chop sideways. And the SPY doing a similar thing, but at a much larger time frame. So there's some room for it to go upwards, whereas the QQQ had a limited amount. So we got one moving up, one looking like it's going to go down, and then we want to see if we could hit that window before it closes. Now, this is something that requires being agile or nimble, and that it's not something generally that large institutions do or can do unless they're maybe a prop firm and they're putting out maybe a couple $100,000 at a time rather than millions and millions or tens or hundreds of millions at a time. So we want to be very careful in discerning what time frame that we're talking about and what the window of opportunity is for us. So the S&P 500, you can see there, or SPY, that we broke above this MA 150 and this 519 level that we were very careful to look at. And then we pulled back from that EMA 100. What that means is that there's still room for this to go back up to that EMA 100 and to the EMA 8, potentially even to the EMA 20 and MA 50. And then from there, 50-50. We don't know if it'll continue to go up or it'll bounce back down or if it will chop sideways. So this is the window of opportunity to the upside that we have in the SPY, either up to that MA 100, EMA 8, or the MA 50, EMA 20 levels. So that's what we're looking at. So if we were a large institution, we wouldn't be playing this game. We'd be like, okay, what was the best thing for me to do? I would just wait until we get to these levels and then decide if I'm going to go long or go short. Because we are smaller and we are more nimble, we can try to capture these shorter windows of opportunity. Now, the QQQ looked really different. The QQQ went up smack into resistance. So its ability to move higher is low. So basically what we're saying is if I'm an institution, I have to wait for the SPY. But if I'm an institution, I don't have to wait for the QQQ. I'm at that level. So institutional behavior right now, what is the most likely thing to do? Well, we could trade around in this green area for a while because remember, institutions have a large amount of capital to put to work. And the question is, will they be buying QQQ like stocks, tech, consumer discretionary, or will they on net be selling it? And we need to be able to discern the activity of algorithms versus actual positions that institutions are making. So the algorithms, or if it's institutions, then we could get stuck in here, or we could see immediate movement. And based on the sectors and the momentum that we looked at yesterday, the most likely direction for the QQQ is downwards. If we see it go upwards, then most likely what's happening is that algorithms are trying to flush out. They're saying, hey, why don't you guys buy some more? Because I'm getting ready to sell. Why don't you guys look over here and see how tempting this is? Look, we might be breaking up and breaking out. Why don't you guys start buying some stocks? And then they'll start dumping the stocks on them and then we'll come down. So really, there is more room to go in the QQQ. Let's take a look at futures and see how that might play out today. And then we'll talk about a news item that came out over last night. So I'm expecting this morning to be up and positive because of the news that came out last night. And we'll see how long that piece of news can affect the markets. Because remember, at the most, generally news will affect the markets for 1 to 3 days. So we'll see what this particular piece of news might do. Okay, so we're up On the S&P, about 1%, a little over 1%. On the Dow, not quite there, about 70 to 75 basis points. And then on the NASDAQ, a little over 1%. So that was about 1.3. So definitely up. Now, can that sustain? Oh, we'll see. But the news item that came out was the Bank of Japan. Earlier last Thursday, the Bank of Japan said that we are going to start raising rates and we're going to raise them indefinitely. We have no target to the upside. That's what set a lot of traders into a panic, or institutional traders into a panic, because of that carry trade that I've told you guys all over the last couple of days about. And if you don't remember, then I'm just going to have you reference the previous videos because I don't want to take up too much time with it. So last Thursday, when we got this first downward movement, which wasn't that bad, was the beginning of institutional reaction to the Bank of Japan. And then we got the gap down and then the gap down. And it looked like we were panicking. We had that spike all the way up to in 60s on the VIX, which is crazy because we've only seen that in major recessions like COVID or 2008 financial crisis, 9/11, those types of things. That's when we see the 60s, 70s, 80s type of VIX. So that actually, it made institutions panic. And because institutions panicked, then the rest of the market panicked. So today, or overnight, Bank of Japan said, hey, as long as markets are unstable, we're not going to raise rates again. So what they did was they removed some of the uncertainty, and markets really don't like uncertainty. So that's why we had this panicked move. And now institutions have a better idea of what to expect. We can stabilize a little bit, but the question is, does that mean that institutions will now stop selling? And the answer is no. We are not looking at a one-time event. We are looking at a series of events, that a policy, I should say. We're looking at a policy that is being made by a central bank. That's like saying the Fed's policy. Oh, they're going to start cutting rates. They're going to be doing it for a year or two, for a while. They're not going to just do it once. So that's going to have a longer term effect on the markets. So the Bank of Japan raising rates at the same time that that we're anticipating that the US is going to start lowering rates, that closes the gap between those two rates. And that means that as those events continue to happen, then institutions will need to continue to sell off their positions to make up, to reduce their exposure to the difference in rates. So their selling is not over. It's just that they don't need to panic sell anymore. And so over the longer term, we should expect that they will continue to sell. When are they going to sell? Are they going to sell right now? If I had S&P positions, the answer would be no. I'd be selling up here. Let it recover, get a better price for my assets, because I was panic selling before. So I'll just take any price. Now I can be more judicial about the prices that I get. Now, specifically the assets that we were talking about that they needed to unwind were the ones that they bought in the last 2 years, which were the AI SMH type of stocks. And that's all tech. That's all QQQ. So is this a good place to sell? Not bad. Not bad. EM8 could be a better place, but it's really not that far away. So if I'm a large institution, I'm not going to be that picky. So in this area, in this region, is where I sell. And the longer we can keep prices in this area, the more I can sell. And before it starts going down and I get worse prices. So over the longer term, my expectation now is that the QQQ will continue to go downwards. However, if institutions play this well and play this correctly, then they're going to try to make this chop sideways. for a little bit. And it's appropriate for a huge downward movement. It is appropriate for the markets to chop around for a little bit. The other thing is, if this is going to recover, if we're going to recover and believe that this is going to continue to go back up and move upwards, then we would want to see a sharp movement upwards. So far, we're not getting that. We'll see today. We're in pre-market, we can see we're right at that MA 150 and in middle of this green region. We'll see if it can hit that EMA 8 and then go higher to the EMA 20. I doubt it. So in order for us to be optimistic about a recovery in the QQQ or even the SPYs, we would want to see that V-shaped recovery, just like we did in COVID. V-shaped recovery. Came down hard, came up hard. Not quite as hard as when we came down, but very hard. Not like 2008. Not like this, where it came down and it came down and it stayed down here for a long time and it very slowly went up. And over the course of 2.5, 3 years, we finally got to the same level. That's a U-shaped recovery. 2020 was the V-shaped recovery, which is pretty rare. But all of that happened in a span of, oh, wait, am I looking at no, wrong one. Right, from here to here. So by June, we were, so from end of February to the very beginning of June. So we'll just call that end of May. That's only March, April, May, 3 months. Okay, it's 3 months versus 3 years. So the QQQ and the SPY, what we would need to see is that similar type of V-shaped recovery in order for us to be confident. And so far, we could potentially do this. The potential, we can't say that it's impossible, but the likelihood is low. Why? There's too much stuff in between. There's this horizontal resistance, which is also the MA 100 or EMA 100, and then the EMA 8 right on top of it, and then the EMA 20 and the MA 50. And then actually, we don't need to just cross that MA 50. We need to get back right here above this line right here. And so for us to say, okay, over the next 1 to 2 weeks, just continuously move upwards and break through all that support, the chances are low. And the longer it takes us to do that, the more opportunity there is for another piece of negative news to hit the markets and just send us back lower. So we're not talking at this point anymore about a recovery upwards. Chances are that we have now created a downtrend environment. It's just that we're not going straight down. There's going to be bounces in between. We bounced off of the MA 50, then we came down hard to the VWAP, and then we're bouncing off the VWAP. We're probably going to get stopped somewhere in between here, between this MA 100 and the MA 50, and then we'll come back down. And so the question is, if stocks do this, does that look normal? Or does it look really weird to say, markets don't really move like that? The answer is, yeah, this is perfectly normal. And then, so then the other question is, how about this? Well, if I look at it like this, then yeah, that is also normal. So it could go either way, but right now, because of all of the resistance that we have right here, we are not going to expect it. So if it was going to do this, then that would be similar. You say, hey, that's similar to this. So why don't we believe that it's just going to do this? Why is it more likely that we're going to do this? And the answer is, when we did it back here and we fell to the MA 100. And the EMA 8, the EMA 20 were right there, very close to that EMA 100, and the MA 50 wasn't really that far away. So for it to bounce above through all of those levels, it wasn't that difficult. Actually, we were bounced off of the VWAP and the MA 100. Now we're bouncing off the VWAP, but we're well below the MA 100. We're well below the EMA 8. We're well below the EMA 20 and the MA 50. So here, whereas just one piece of slightly wide band of resistance, here I've got several layers of resistance. So it's going to make it a lot more difficult for it to do the same thing as when we had this pullback right here. So right now we're looking at that scenario where, okay, most likely we're going to recover a bit and then move downwards. There is still the chance that we will move up and then match previous highs and then have a new high. But right now, based on the picture that we're seeing, not too much. I sent out that piece of news that JP Morgan estimated that the panic sell, the retail traders sold like 1 or 2 billion and institutional traders bought like 14 billion. Or I think those are the correct numbers. I'll have to go back and look. But look at this. That's this bar right here. Look at this huge green bar. I mean, for months we're sitting underneath that MA 50. But suddenly we have this huge amount of buying. Okay, what did it do to the market? All it did was stop it from falling. It didn't give us the V bounce. We have a large amount of buying yesterday as well. It gave us a little bit of a boost. We hit the MA 100, but we did not stay there. We pulled all the way back. Today, if we get a large green bar, same thing. We'll hit the MA 100. We'll hit the EMA 8, maybe. And if it's super strong, then we might hit that MA 50. But then what happens? Does it back off? If it does, that's not great news. If it stays up there, then we'll see. Can it break that MA 50? So there's still layers of resistance in this market, making it a little bit more likely that we're going to pull downwards, or we might chop in a wide range. Okay. And either way, the way that we're positioning ourselves and the way that we're preparing ourselves is that we're going to be nimble. All I'm looking to do is capture this movement right here. Or maybe this movement, if it's really just a small, okay? One of these two scenarios. That's all I'm looking to do. In that movement, I could make 100, 200%, and then reevaluate when we get here. So not try to make predictions. Like I said, when we hit this point, it's sort of 50-50. And at least from the macro view that we're taking right now, in order for me to move off of 50-50, I need to be able to dig in and look underneath the hood, just like it's either yesterday or the day before, where we started out and say, okay, when we move here, it was Friday. I said, okay, we got a 50-50 chance of us moving up or moving down. Let's be prepared and maybe hedge. And when I looked deeper in, when I looked at momentum levels and how the sector's reacting, I was like, oh, we have maybe a 60-65% chance that we're going to move lower. Actually, it changed the odds, but I had to look deeper in order for me to get that clarity. And I can't do that when we're over here. I can't say a week from now, this is what the momentum levels are going to be. There's no way for me to do that. So I have to evaluate at the time when the event actually occurs. So for now, all I can say is when we hit here, then we've got a 50-50 chance, unless I can look deeper and maybe see something that pushes it one way or the other. And there's no guarantee at that moment in time that I'll be able to find something that pushes me off of 50-50. But we're just playing this right here. That's how we're just baby bullish in our portfolios on very specific sectors on the SPY, those defensive sectors, and on the QQQ will be bearish on the tech and the consumer's discretionary type of stocks, because we're already at that resistance. I'm already at, hey, if I was looking at a macro view, I would be at a 50-50, but we are at the point where we could look at all these internals and we have news items. This is reacting off of news items, not necessarily just internal levels, not the natural rhythm of the markets, but also outside forces. And we're very clear what those outside forces are, just like we were very clear what the outside forces are during COVID. Well, right now, we're very clear what the outside forces are on specifically the QQQ. It's the Bank of Japan and the Fed, the US Fed, but mostly the Bank of Japan. So given that piece of information, we can say, well, the odds are a lot higher that we're going to move downwards, although we could have a period of chopping sideways before we move downwards. And so on this portion, in these sectors, we can lean slightly bearish, not super hard, just slightly bearish. We don't go full bear or full bull unless we have agreement in the overall markets and the viewpoint is clear that we are in bear mode or bull mode. And right now, that's not the case. Right now, we're in between. See, like, I guess the easiest way for me to show you is here. This one says bear. It doesn't say strong bear. And this one says neutral. We are neutral. We don't know. We don't know to lean down or up, but we have maybe a slight bias toward the bear. So everything I said matches up with this. These are my own indicators that I came up with, and just kind of as a head check. So now I don't look at these and say, oh, we're bear and we're neutral. What I do is everything that we just did in the last 20 minutes, and then I look and say, is there agreement? And there is agreement. And so we're in this neutral territory. It's not time to lean our portfolios super bearish or super bullish, but we are very selective. Like I said at the beginning of this, we're going to be nimble and be very selective. And we're just looking at these short-term viewpoints of we are just looking for that in the SPY, maybe not quite as much, maybe just this. And then on the QQQ, I'm just looking for this. Nothing more than that. Just this low right here, or maybe just to the MA200. Why? Because we could chop. I'm not saying that we're going to do this. I'm saying that I know that this is a very high chance of happening, but then after that, we could just chop around, or we could go down. So I don't know yet. I won't know until I'm here. And so for now, I'm just going to anticipate that. That's where my higher probability exists. So we have a good idea of what's going on. We're opening near resistance or inside a resistance. So don't be surprised if we get pulled back during the day. Be a little bit surprised if we break through past that EMA 8, and especially if we break through past that MA 100. I'll be very surprised if we break through that today. And then on the S&P, we have more room. We could go all the way up to that MA 100 or EMA 8. I'll be very surprised if we make it all the way to EMA 20 or MA 50. But once we hit these levels, chances are we're going to pull back. Why? Because I'm not expecting a V. I'm expecting down, maybe some chop, 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 or a recovery, and then a movement downwards. And right now, I'm leaning more towards chop in both cases, SPY and QQQ. But like I said, if I'm playing very short term, chopping sideways means the SPY could bounce up to here, and the QQQ could move down to here. But that's it for this morning. We'll leave you guys to prepare for the market open. Have a wonderful rest of your day, and I'll see you in the post-market analysis.